Hi there, it's Jason Blackman here, and I'm an accountant. I'm based in Lewes on the south coast of England, and as you'll probably notice, I'm driving. So what I'm going to do is, as you'll probably see from last week's clip, I'm now going to make a weekly series of YouTube clips all about helping the self-employed with their tax, accounts, bookkeeping, payroll, VAT, etc, etc. So this is the second video in the series. Last week I made a video all about whether sole trade or limited company is best for your business, and this week I'm just going to elaborate a bit further on limited companies. Now, just before I go on, if you'd like to give me a thumbs up for the video, that would be fantastic. It would really help me. Even better if you could subscribe to my channel. As I say, every week I will be uploading another clip, so if you subscribe and hit the bell icon, then you'll be notified of when I upload each week's clip, and hopefully there'll be gold for you each week. So, and also, by the way, I just mentioned in the description is a link to my contact page on my website, so just in case you'd like to ask me any questions or advice or tips or anything at all you'd like to ask me, click on the link in the description, go straight through to my contact form for my business, Just Pure, and yeah, drop me a line with anything you want at all. So, the question we're going to ask in today's clip is, do I own the money in my limited company bank account? Now, this is a question I quite often get asked, and in my 20 years of being an accountant, I not only get asked it, or I not only have got asked it a lot, but I also see people thinking that they do own the money in their limited company bank account. So I could make this video really quick and say, no, you do not own the money in your limited company bank account. That would be a really quick clip, but I want to explain it a bit further. So the simple answer is no. Now, if you've listened to my clip from last time about the differences between sole trade and limited company, then you'll know that I said in that clip that being a sole trader and being a limited company are two completely different things, and in HMRC's eyes they are two separate entities. So if you're a sole trader as a person, that's one entity. If you're trading through a limited company, the company itself is another entity. And as I mentioned in the last clip, if the limited company builds up any debts in general, then the individual is not responsible for those debts. So with that in mind, I guess the kind of logic should follow that if a limited company is a separate entity, then that doesn't mean you can use it as your personal bank account. And I have seen lots of clients do that in the past and had to correct them, unfortunately, because the money that sits in your limited company bank account doesn't belong to you personally, it belongs to the limited company. Now, Jason, you may say, but it's my limited company. Well, you're correct in the fact that if you're a director, if you're a sole director of your limited company, then you control that company. And if you're a shareholder in that company, then you're obviously perfectly entitled to draw dividends from the company. But that doesn't mean that it's your money. It belongs to the limited company. So how do I get the money out, you say? Well, you get the money out through usually two methods. Now, one of them is a salary. Now, because you're a director, even if it's your own limited company, if you're a director, then you will be classed as an employee of your company. I know it all sounds a bit convoluted, but that's how it works in the eyes of the law. So you'll be classed as an employee of your limited company, and as such, obviously, if you're an employee, you're entitled to have a salary. Now, how much salary you have depends on a lot of factors, and I will go into that in a later video. In general, it's more tax efficient to be on a low salary, but as I say, it's different for every individual circumstance, and I'm not going to tell you how much salary you should be drawing. I'll go into that in another clip. But basically, because you're an employee of your limited company, then you are entitled to draw a salary from the limited company. So you can be paid, you as the individual can be paid by way of a salary. Now, if you're a shareholder of the business, now if most of the time with sole directors, then you will be a sole director and a sole shareholder. Usually when you set the company up, you'll set it up with one share, which equates to £1. So you've got £1 equity in the company. But obviously when the company makes profits, you as a shareholder can draw dividends. So that's the two basic methods that you have of extracting money from your limited company. So you can take money by way of a salary, and you can take money by way of dividends because you're a shareholder. Now, again, how much in the way of dividend you can draw is very much dependent on the circumstances of the business. If you're making lots and lots and lots and lots of profits, then you can draw a fair amount of dividends. But obviously, if you're not making profits, then there's no dividend to withdraw. You know, dividends come from profits. So you have to be very, very careful. And again, I've seen lots of mistakes made. But you have to be very careful how much dividend you take from the limited company. And again, that's a subject for another day, which I'll go into. Really, this video is all about how you draw money from your limited company. So you should never use it as a personal cash point. You should use it to draw your salary, whatever you think is best, or whatever you and your accountant think is best for your circumstances to draw from the business as a salary, and you can draw that. And whatever dividends are available, then you're able to draw them as well. But obviously, if the company's not in profit, there's not going to be any dividends for you to draw. So it's really important that you grasp that. And it's really important when you're looking to draw dividends that you sort of examine the profit in the company first. Now, another little side note, which I will say, and again, I'll go into this later in more detail, but when you look at your profits in the company, you have to allow for corporation tax. A limited company pays corporation tax on its profits, and therefore, if you're looking to take a dividend, then you have to make sure that you allow for that tax to be paid from the business before the dividend is taken. So let's say, hypothetically, you had a profit of 10,000, you wanted to take a dividend. You can't just take that 10,000. You have to allow for the corporation tax to be paid. So let's say corporation tax is 20%. I know it's not, but I'm saying that for ease of calculation. If your corporation tax was 20%, then you'd need to leave 20% of the figure, which I just said, which is 10,000. I think I just said, didn't I? So if let's make it even easier. Let's say the figure is 1,000. Let's say you made £1,000 profit in the month. You can't draw that £1,000. You have to allow 20% tax, which is 200. I've just worked that out. So that would indicate that 800 would be allowable for you to draw as a dividend rather than 1,000. So you have to make that corporation tax provision before you draw dividends from the business. I hope that's clear. I think it is. Yeah, I had a client probably about a year ago that did use their limited company as a personal cash point, and I look at the bank statements, and almost every day there was cash withdrawn from the business, leaving about £1 or £2 in there each time. Not advisable at all. Not advisable at all, because there's no provision in there for tax, and as such, when the end of year came around, there was a bit of a mess. So don't do that. So back to the question: do I own the money in my limited company bank account? No. It's owned by the limited company, and you can pay yourself as an employee a salary, and you can pay yourself dividends from profits as a shareholder, but the dividends must be paid after you've taken into account the tax provision, the corporation tax provision. I hope that's helpful. If you like the video, give me a thumbs up, subscribe to my channel for weekly updates, and give me a shout if you want to contact me through the contact form, which you'll find find as a link in the description to the video. I hope that's been helpful, and looking forward to see you all again next week.